Morgan Stanley says that the S&P 500 could drop 26% in the next months. No one likes losing money, and investing is complicated, which is why I made this channel to make investing simplified. I've seen people make hundreds of investing mistakes, but these top 5 are among the worst. Hundreds of thousands of dollars are on the line, so let's get right to it. On this list of mistakes, number 5 is paying a money manager to manage a basic portfolio. Now, if you're an absolute beginner or somebody who just has no interest at all in learning about investments, and you never care to understand how the stock market works or what might be best for your portfolio based off of you personally, then yes, it may be a good idea for you to have somebody else manage your money, because they're going to be able to get you more money than, say, putting it in a bank. But that's not your only option. You don't need to understand everything in the stock market, which is specifically why I made this channel. It's for those of you that don't want to do all that crazy research. In a couple of my videos, I show how you could just pick one ETF forever, just put your money into that, and that historically has brought even a better return than paying somebody to invest your money for you. Because traditionally, somebody managing your money usually takes about 2%, where putting your money into an ETF like VOO, which is the S&P 500, or VTI, which is the total stock market index, takes an expense of 0.03%. The difference between 2% and 0.03% don't seem like a lot, but here's an example. If you have $100,000 invested, if the account earned 6% a year for the next 25 years and had no costs or fees, you'd end up with about $430,000. If on the other hand you paid 2% a year in costs, after 25 years you'd only have about $260,000. The 2% you paid every year would wipe out almost 40% of your final account value, and you'd lose out on $170,000. 2% doesn't sound so small anymore, does it? The fourth biggest mistake that I see people make all the time is believing the media. That article from the beginning of this video just came out, and I've had so many people ask me about what I'm going to do because of this huge drop that we're going to experience. So here's what you do when things like that come out in the news. As a smart investor, I'd hope that you'd actually go and read that whole article. I know personally because I'm a business professor and so I teach on marketing, but the media gets paid to elicit a response, and fear is a huge response. In this article, it's not necessarily all of Morgan Stanley that has this projection, but one analyst at Morgan Stanley, and his worst case scenario could be up to a 26% decline. As you read further, the article literally says that he says that's very much out of consensus at this point, especially as active institutional and retail investors are more bullish than they've ever been in over a year. Which means that even the analyst is saying that his projection is not the norm, and even contrary to what's actually showing in the market. If you're a long-term investor, which I hope that you are, this type of news anyway would just excite you, because if the market did drop, then you get to buy in at even cheaper prices, which means that your profit is going to be even higher down the road. Almost every single day there's a new doomsday projection, which is why you need to listen to the next mistake very closely. The number 3 mistake is not doing enough research. I put this ahead of the last one because if you hadn't done the research, then you would have no choice but to believe the media. If you don't know why they might be wrong or why you shouldn't even care if they are right, then yeah, you're gonna do something dumb like sell your position due to media hype. Doing the research includes watching this channel and seeing how I analyze things and how I do things, but that should just be the start. Never take one person's word as gold, but use it to start your search and figure out everything you can. You want to go very, very deep before making any decisions. I do hundreds of hours of research before I ever make a purchase on stocks, ETFs, real estate, crypto, or anything else. Until you fully understand it, don't even think about making that purchase. While you are researching the ETF or company, set it to watch, and every single day check in on it, just see what the price is doing, and especially see what happens when certain media or hype comes out. Get familiar with the volatility that is the stock market, and again, you want to go incredibly deep on any research for any possible investment, which is why number 2 is so important. In order to go very deep in your research, you need to not have a bunch of things to research. Just like at your job, if you have 20 tasks to get done by the end of the day, you're going to do each quickly and without much effort on any particular one since you have so many to complete. Number 2 is to limit your options. Warren Buffett famously describes that he doesn't have to be right about all the stocks, he just needs to be right on a couple. He and other wise investors have described why they didn't invest in flashy stocks like Tesla or certain tech stocks, and the simple answer was that they didn't understand them and that they didn't even care to understand them. You don't have to invest in everything. You probably shouldn't invest in everything. I know for a fact that semiconductors are all the rage right now, but I'm very happy with my portfolio and my portfolio strategy, and so I'm not doing much research to even look at semiconductors because I don't need to stress myself out unnecessarily when I already have a good plan. This channel is all about making investing simplified, and literally the most simple but effective way to invest is to pick a couple of ETFs that make a lot of sense for you and your portfolio and buy and hold forever. I have 3 ETF categories that after hundreds of hours of research and analysis, I've found to be the absolute best portfolio for any age group, and I go over it in depth in this video that I'll link to in the description. It's absolutely the next video you need to watch after this to figure out how to invest and specifically how much percentage of each ETF is recommended at your age group. So definitely check that out if you're curious as to what you might want to invest in specifically at your age. Now, mistake number 1, we've all been waiting for it. And you've heard this 1,000 times likely, but please listen to the second part of this. But number 1 is not timing the market, and this includes waiting for the dip. Most of you understand that you shouldn't just sell because the market's dropping down, and you shouldn't get scared out of a position. But I know for me personally, I start to feel like I know the stock market and I understand how it's going to work. And so I start to see certain trends and then I think, well, it's been dropping a bit here and statistically it's dropped like that before, and so probably in 3 months it's going to drop even more with this media whatever happening. And that is a trap, because you really start to believe that and then you just hold your money off to the side, and then what happens is inevitably for the next couple weeks you now don't invest that money because you're waiting for that big dip, and that's when you're going to cash it in. But either that dip doesn't happen or you find another place for you to put that money, which is usually buying something that you didn't need, and then that money never gets invested after all. The absolute best way for you to build your wealth long term has been proven over and over, and that's just consistency. Set a certain amount to be transferred into your investing account every single month, no matter what. This could be through your company's 401k or 403b, an IRA, a Roth IRA, or just a regular investing brokerage platform. Either watch that video that I was talking about before explaining the best 3 portfolio by age, or watch this video here that explains exactly how to invest your money and specifically what order. Especially for those of you that are wondering, should you save some money right now, or should you pay off certain debts, or where should you invest, Roth IRA versus 401k? Watch this video now to simplify your investing and hit that financial freedom quicker.